The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. We got the S&P is up half a point right now. Today is FOMC day. We got the Russell currently is, let me check this out. We got the Russell right now is down just 0.2. We got the NASDAQ down 3.25. The Dow is down a mere 9 points on the day. Copper is currently, let's see here, down 0.05%. We got gold up 0.09. We got silver up 0.22%. So pretty, nothing happening in metals, nothing happening in the indices. If we look on over to the energies, we do have natural gas down about 1%. Oil is pretty flat. We got ags are moving a little bit. We got about a 1% move in corn. We have a 0.5% move in soybeans. Walking on to the currencies, we got euro dollar up 28 pips. We got Aussie dollar up 5. We got pound dollar down 12. Dollar franc is down 18. Dollar CAD is currently up 3. The dollar yen is up 1. Aussie yen is up 12. And euro yen is up 24. Pound yen is currently down 5 pips with the euro pound up 22. That catches us up. Rollover's done. So I'm going to go ahead and get rid of those old contracts. Get them off my list. But, I'll do it later. But, yeah, it's not worth doing it right now. Okay, so we got all those caught up. And the main news of the day is going to be our FOMC. And let me pull up our list, okay? And so we'll grab that, put it up on here. And we're going to walk through the trade together. And we'll put, like I said, just different little pieces in here. And I know we're going to, when we get into this, that's what we're going to be doing for the rest of the period. So I want to see if we have anything else that I want to get on the roster for tomorrow. So first thing I'll do is I'm going to knock out the news plan real quick for what's coming up after FOMC, because that will take up the rest of the show. So let's look right over here. We got the GDP coming out. Let's go down to New Zealand tonight. We talked about that yesterday. Not really going to focus on that one. Let's go ahead and hop over. We got a LIBOR rate over on the dollar franc. We also have retail sales, jobless claims, and Philly Fed manufacturing index happening tomorrow. So on the dollar franc, the Swiss franc, the franc that will be releasing the LIBOR rate at 3:30 a.m. tomorrow. And what might we be able to do with that information? Let me pull it on up, and I'll give you a little plan that you can put together potentially for that trade. And I'm just pulling all the details for you. And charts are just taking a minute to load for me. Okay, so looking at it, and looking at a 7 a.m. expiration, we got about a 40 pip move, pretty quiet before the release. Looks like it's consistently very quiet before that release. Dollar franc, not a big surprise that time of night anyway. So when I'm saying like 12 to 3, usually not a big move. Every once in a while there'll be some, but usually not a massive move. Okay, so going out to 7 a.m. So we're looking at dollar franc. We'd be looking at entering anywhere between 11 and 4. Okay. The announcement will come out, I guess 3, right? Because let me pull up the date for tomorrow. We had time changes and all that. But what are they doing there? Okay, they're going to do their LIBOR at 3:30. So between 11 p.m. and 3 a.m., you have your entry for a 7 a.m. expiration. And with the majority of those not exceeding 35 to 40 pips, many of them more in the range of like 5, 10, and 12 pips. Only a couple getting, up to that 40 pip range. So it's very, very rare that they move that far. We're going to go ahead and we're actually going to go for a 35 pip iron condor. We're going to buy the lower spread, sell the upper spread. And it's basically their interest rate announcement. Okay, that's what it is. And they haven't really had, any changes for quite a while. And they've just been reporting in at their actual 0.25 over and over and over again. So they had a little odd drop there to zero for like one period there. But we're at 0.25. So we're going to go ahead and we're just going to do a 35 pip. We ought to be able to get that. I would be surprised if you could pull off at least a $35 or more. 11 p.m. to 7 a.m. dollar franc on their interest rate announcement. So they'll have their press conference, but it's nothing like ours. Okay, it's just a pretty quiet move more often than not. And I don't even see a single big move on the last 12 releases going back to 2011. Okay, so we got that one. Let's go ahead and look at the retail sales for British pound. Will be coming out at 4:30. And with British retail sales, let's see what we can get. Maybe I can load these up a little faster. So come on. And all right, so last announcement, pretty small. Did do a move up about 35 pips, but finished at 4. Then we got again 35, finished about 17. We did one big move back in March. It ran up about 60, finished at about 60 there. Then we got 32. Then we got 90. Let's see there, 10, 45, 5, 33, 39, 53, 30. Okay, so we have, looks like one big move out of the group. The rest of them are, looks like 35 pips or less by the end. Okay, we had 2 of them. So 2 out of the last 12 releases finished greater than 35 pips, or right at I have to run at the 3 on 35. But so greater than 35, there's only 2. So 2 out of the last 12 finished greater than 35. One of those was right at like 60. The other one was pretty big. It's about 100. Most of them are coming in at somewhere between 10, 20, 30. Due to the nature of having a lot of these at 38, we need to make sure we get some sort of profit on this thing. May not be able to pull it off. I'm going to say you're going to want a 45 pip iron condor, $45 minimum profit, entering at as early as 11, no later than 4 iron condor on this. And then looking back and just sort of seeing the history, making sure to double check on how early we can get in. Like, is there any massive movement that would mess us up on a consistent basis? Let's see here. It's like the ones where it would have got us either way. And let's see here, where'd that end at? I'm trying to just make sure I got accurate information for you. If you'll do the 45, that should more than account for any kind of movement that happens between midnight and the announcement at 4:30. So I would go ahead and say between midnight and 4 a.m., between 11 p.m. and 4 a.m. you can enter for the 4:30 news announcement on the pound retail sales, choosing the 7 a.m. expiration, doing an iron condor for 45 pips minimum, $45 minimum profit. Buying the lower spread, selling the upper spread. There's not enough big moves to go for a straddle unless you can pull one off for $20 or less. So if you can pull off a straddle for 7 a.m. at any time between 11 p.m. and I'd say 4:15 a.m. for a $20 max risk, then you could do a straddle on the pound dollar. Okay? But it's going to be one or the other. You're going to see one or you're going to see the other. It's going to be way too expensive or it's going to be really cheap. My guess is expensive. Especially with the LIBOR rate and all coming out, and then with having our Fed funds today, that'll pump up implied volatility. Okay, so that knocks out the pound retail sales claim for us. Let's go ahead and check out the jobless claims. Jobless claims are one of those you just got to pull up and look at the stats on. We're looking at euro dollar. And, of course, it gets all of them. You got to pull up and look at the stats on, right? And we're looking for, potentially, like I say, at 10 a.m. Let's see what kind of move we got. 25 pips. Let me do a little analysis across every pair. And, all right, so, yeah, let's see. All right. Just trying to see what's going to work out best for us. That's one of those trades you really got to pull up your expected ranges and expected moves. It comes out at the exact same time every week. So it's almost one of those things that's not even worth completely doing a review on over the air. Maybe we'll spend like one show just talking about it. But it's not a massive mover. I mean, most of the time you're getting like 10 to 15 ticks. Every once in a while you'll get this massive bangerang, 30, 40, 50. Sometimes a 100-pip move. But, I mean, the last 12 releases is the last 12 weeks. So, it doesn't give you just that full picture of the unemployment rate, and you got to look at the seasonal cycle with it. There's a lot more going into it. But I would just look at expected movement lately and use that to price in the whether or not it's a good trade or not. So that one is a little bit different because it comes out every week, sort of like oil. And since we got NFP today, then we'll come on back to that. Let's see here. And, all right, let me see. My chart's not showing up. Let me see what's going on with my chart. Not quite sure why that's not pushing through. I pushed it at the beginning. Here we go. See if that'll work for you. Sometimes they just don't come through. Okay, there we go. But yeah, so I'm just going through. I'm just reading through the different reports right now that are coming out. It's one of those things. As long as you're just keeping up with the news announcement I'm talking about, you ought to be good either way. There's nothing unique on the screen to watch. Okay, so there will be here when we start talking about the Fed funds rate. I just want to get through this during the first segment. Hopping on over to the last report for tomorrow, we got Philly Fed Manufacturing Index. And let's see here. Come on. Trying to bring that on up. And all right, so we'll wrap up Philly Fed when we get back, and then we'll focus on the FOMC announcement.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And let's check a few things out, see where it all is. We're trying to wrap up the Philly Fed Manufacturing Index and get that one done so we can focus on the Fed release. Looking at the Philly Fed and just trying to, like I said, come up with the best possible plan if we can get a good one for it. But we're getting a very similar, obviously, reaction here as we had on the last report. But I'm trying to get, for 10 a.m., it's sort of odd with all the time changes, how they move everything around. But looking at the 11 a.m., it is a this might be at most about a 25 pip move report, and often it's much less than 25 pips. So what I'm going to go for on this one is I'm actually going to go for a 9 to 11 25 pip iron condor on the euro dollar. So Philly Fed Manufacturing Index released at 10 a.m., entering at 9 a.m. So at 9, earliest. You can enter later, but I get up to 9:55. But really, I think you're just going to be costing yourself the potential premium. So at 9 a.m., going for a 25 pip, if possible, iron condor for 11 a.m. expiration. And that's really all there is to that one. And a lot of these are just, they're small moves, like 0.5, 10, 5 ticks. So trying to straddle it is a pretty worthless endeavor. Without getting a little tighter on the strikes. And let's go ahead. Let's check out the Philly. Let's go into the federal funds rate. Let's dive right on in there. And let me bring on up the spread scanner. And let's see what we can pull off. All right. All right, so we're looking at the report. It's going to come out here in about 30 minutes. And the idea is, how can we best capture the moves that happen on the Fed funds rate? And obviously we usually get a lot of volatility, and we can see sort of if that volatility is priced in or not priced in to the market. I know last night it was definitely priced in. There was a lot of implied volatility built in there when I was looking at the prices yesterday. So if we go down here and pull this on up, and we'll just focus on, say euro dollar, pound dollar. Get that. We can pull some charts up and all that, but that should take care of this trade. Let me one more piece I want to pull up here for you. So it was interesting when you're trying to sort of run through 25 different things on one show. All right, so let's look at the spreads first. And what we're going to do is go down here and just go, okay, well, what are the expected moves that we have on each currency pair? And so we'll start really simple. And we'll just look at, let me pull this up for you. Expected move on each one. And I had the list from yesterday where we put it up there. Okay. So our expected move is about 70 pips on the euro and the pound here. So let's look at what the premium is. And we got to make sure we get the ones that expire after 2 o'clock, right? So let's get rid of those. Let's say we want there to be at least, 35 minutes to expiration. That'll keep us from making the mistake of accidentally choosing the 2 o'clocks, trying to get that movement. Now, you can look at them. Let me show you one more little thing. You could look at them, but there really shouldn't be anything there. So it's like $9. There's no premium in there because they don't expect it to move at all. And so if you try to go the reverse, you'll see there's only like $4. Okay, I mean, there's zero expected movement. So, but yeah, let's go ahead and let's get rid of those. And that'll drop those off our list. Now what we're doing is we're basically going for ones that have a low profit and a high risk. I know it sounds really weird. We're going for a sort of an inverted risk-reward ratio. So look for these really lows, like below 0.25. That's the fastest way to find them. Okay, I just look over here, and if I do that, look at that. Instantly, I just found every iron condor possibility. So now I got to look at them and go, okay, which one's going to be the best one? We'll talk about that out of these two when we get back, if they're good enough, or if maybe we should be doing a straddle, okay? Or maybe neither one. There. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right. I want to bring this up, and I'm working on converting this into a calculator we can put online to make analysis really easy. But I want to really highlight something on this for you. I put in the pound dollar. I put in basically the best two spreads to do potentially an iron condor on. And here's what happened. Okay, it cost me about $61 to buy the straddle, get about $55 if I do the iron condor. I have an expected movement of about 70 pips, which is, good. And I looked at, okay, what would be the break even on my move up, my move down, 65 pips down, 45 pips up. I'll be break even. Have a 110 pip move break even range on iron condor. So that's not actually too bad. I'd have to move 165 pips for me to lose my maximum profit. I like that number a lot. Okay, the chance of the pound dollar route 165 pips, very, very, very small. What I don't like, okay, now that's 86 pips up, 79 pips down. So that gives me a range there. But what I don't like, check out the straddle. Okay. To move break at $61, it'd have to move 122 pips for me to make a 1-to-1. I don't expect it to move 100 pips. Okay, that's 122 pip range. But I'd have to move 112 pips for me to make 1-to-1. On the way up, I'd have to move 132 pips down to make 1-to-1. So if it moves up just 51 pips, I'm break even. I only expect it to move 70. So that means maybe a $19 profit, then fees off of that, right? If it moves down 71, I'm break even, not including fees. Don't really like that either. So not a good straddle. So if you're thinking about straddling it, not a good idea, okay? Thinking about doing a strangle, it's within the realm of possibility. I don't really like where the sell spread is. So what that's going to allow me to do is go, okay, well, I don't like the spread. Selling the upper spread there, which I'm selling the 69.40 to 72.40. Is there what I can get more on? Not really. So, and it didn't really matter choosing that intraday or that daily. I mean, the intraday is a little narrower, so that does ultimately cap my risk. That is the one benefit. I also get about $5 less on it. The bot lower one here. Let's see. I did this has the 68 to 69.50. It says I can bring in $3 on that one. So we might try that. Let's put that one in 6,800 to 69.50. 1.68 to 1.6950, and the price is 1.6922 by 1.6925. Yeah, that really isn't helping out. So, you'd think it would, but it really is not. There's not enough there to make it worth it. So, based on the analysis here, what I'm really looking at pulling off is buying the lower spread of 1.6640 to 1.6940. And I'm going to go really light on this one, okay? Because I'm just trying to walk you through it this time. So place order there. And I'm going to go on the other side where I sell the upper spread, 1.694 to 1.7240. Right here. Okay, we're going to just sell one of those. Okay. And then what I can do is I can grab what's my final fill prices here. What really matters on that, when I bought the 694 to 7240, I bought it at 1.6973. And I sold the lower spread 1.6940 to 1. Yeah, okay, so 1.6973 is what I sold it for. That's what I need right there. And let me get all that in our spreadsheet here. Like I said, I'll make this into a tool. I've just been trying to get all of the math worked out and make it user-friendly. And then we bought that other spread there. So the one that we bought, which is the lower spread, we bought for a price of 1.6919. Okay. So this tells me the math on the trade. It tells me where basically a 1-to-1 risk level is. Okay? Basically where I'd lose if it moved to that price. And I'm going to watch it just the way the Fed funds rate. I'm not going to just set a stop on this one. I could set a stop using the stop trigger function up at 16865 or down at 16865, up at 17027. But I expect it to move about 70 pips. Not stay, but move. So the one other step I want to do is I want to go in. We'll watch it. We'll see how it's moving. But we may go in. We may set a take profit on this so we can grab the oscillations. Okay? And you just have to watch the pound dollar. Now you're going to have to do this after we're off the air. So, because the show's going to end at 2. And the market's been bouncing around about 15 ticks so far. And there's a lot of trades you can do. You can do the butterflies before this because it does nothing. I talk about those all the time. So hopefully you got those from past shows. But, I mean, you can see how just it's been just an oscillation mode since 4 a.m. Hasn't literally done anything. Perfect swing. Perfect iron condor section right there. But, and iron butterflies as well. But if you see it moving down, you want to remove your risk because you know those things go nuts, then one of the options is you can say, well, I opened it at 69.19. I could close out maybe when I see it like, 69.36. Okay? So we'll go with that bid offer is and know that you're not going to get really much higher than that. So whatever the bid offer is on the spreads, if it's $3 right now, then really, 69.36 would be your sell, take profits. I'll go ahead and put that in just so you can see what I'm talking about. So I'm going to go in over here on this one, 69.36, and hit place order. Okay. So now if the market flies up, pops up real quick, it'll fill that one and take profit. Then if it flies down, I got 69.73, goes down to 69.40, so buy back at 69.43 or 44. We'll put a 44 on here. Hit a place order. So that's, a lot of times on the Fed, you'll see this like go boom, 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 like up, down real quick. So the idea is maybe we can get rid of our risk in case it like pops up, pops down, pops up, pops down, and then it drifts one direction. Well, maybe we can take profit on both sides, give up a little bit of that profit, but have the chance to actually alleviate ourselves from the risk on the trade. After the implied volatility sort of comes out a little bit after the news and after the movement happens, where it doesn't really matter anymore. So if it flies up like 40 ticks and then flies down 80 ticks, and could allow us to exit the trade early. Now, what about euro-dollar? That's just doing one, by the way. You can go and you can do a lot more than one, especially if you're holding. But if we go over and look at euro-dollar, right here, and check it out. On the euro-dollar, again, we're looking at the 3 o'clock expirations. We're going to try to find those ones with lower than a 0.25. That's just a fast way to identify them, okay? For the risk-reward ratio, I'm not even really worried about the risk-reward ratio because, again, it's a neutral trade. It's a little bit different in how you manage the risk. And so definitely be demoing this. If you're like, I don't quite know what's going on, just demo it, okay? Demo it, just watch it, play itself out to see how it works. Don't throw your money out there on a guess. Okay. Now, on the euro-dollar, it's sort of interesting. I get the exact same reward on an iron condor as I do on the narrow ones, the 100-point ones, as I do in the 250 wide. So if I was going to do an iron condor on it, then I would definitely want to do the ones that were narrower, the 100-point wide ones, because they do cap my risk out. See, it's like 16, 17, 22, 23. It's like maybe a buck off. A second ago, they were the exact same price. So I would definitely want to be focusing on the narrow ones, not the longer ones for an iron condor, because the narrower the spread, the more my risk is capped on an adverse move. Okay, so that is about 37 pips of premium. I expect it's going to move more than 37 pips on euro-dollar. Okay, so on that one, I am not doing an iron condor. We're ruling that out immediately. Now we're going to flip it around and go, what if I want to go the other way? Yeah, let's see here. What do we got? All right, I'm going to want the cheapest one I can get normally, unless they're the exact same price. If they're the exact same price, that's $1 off. Now I want the wider spread because there's more profit potential. So I could do that one right there, or I could do this one right here. So let's look at those. What happens if we do the math again? Okay, so I'm going to grab the Excel sheet, and let me just switch the screens out for you so you can see the stuff being entered in up here. And all right. So right now we have the euro-dollar sitting somewhere around 1.3575, give or take. And we go over and we look at the upper spread. Okay, we got 1.3570, 1.3820, and then we got 1.3320 and 1.3570 with a bid of 1.3595 by 1.3598 and a bid over here 1.3548 by 1.3551. Okay, so our net result on this one is basically telling me that it's going to have to move 95 to 100 pips to pull off a straddle. It could move that. We have got definitely some moves, reflecting that. Our average move is 70, which means, of course, obviously we have ones less than that price level. But we do got to get that by 3 o'clock. We only have an hour after the release. If it moves up or down 49 to 39 pips, we're breaking, which means we're losing after that. I don't like that trade. Definitely not on the euro-dollar. So not a good iron condor. let me do a review on Euro-dollar for 3 o'clock. And let me pull up some stats on that real quick and just see if that straddle for 3 o'clock for that kind of cost, for a $50 cost. Now, a lot of that, it will move 50 pips, so it's not like an unheard of move. It's just how much more is it going to move? Meaning, in that first hour, are we going to get enough movement on a consistent basis that it'd be worth risking $50 on the trade? Because I know that basically it has to move either up 95 or down 105, and that's not accounting for bid-ask spread. That's not accounting for fees for it to be up 1-to-1. Okay. With that, that also tells me another thing I just thought of that I want to bring up to you. Okay. That other thing is when you're picking that spread, and we just noticed how far does it have to move to be 1-to-1? It has to move 100 pips, right? Well, if it's going to have to move 100 pips to be 1-to-1 on a straddle on the Euro-dollar, then there is zero benefit of choosing the 100 pip wide spread because it can't move far enough to bring me to be at 1-to-1. Okay? So it could only move like 70 pips, which would cover 25. And I guess it could move 100 pips, but the most I could do is at the very, this is what would happen. You'd be at the very, very, very top of the spread to pull off that 1-to-1. And it's going to move slower the closer it gets to a floor ceiling. Like any option moves closer when it gets, moves slower when it gets to a strike. The gamma slows down, which slows down the delta. So you really are going to want that wider one. You don't want to be trying to take profit at the floor or the ceiling of the spread, if you can avoid it. Let's see here. Okay, so I was hoping that was going to make it easier, but it didn't. I was trying to get that 3 o'clock price for you quickly. Okay, so yeah, last report. Okay, now remember, now one thing we talked about on this report is the report with the news conference, which has a significantly different movement usually than the ones without. So that real movement we're expecting like actually in the last 30 minutes. So unless they do some big surprise, but the last 30 minutes. We got last report that had a news conference. We got a 95 pip move by 3 o'clock. So that's good. Let's see, the report before that had a news conference. By 4 o'clock we had a great move, but let me pull up Forex Spectre over here just to make sure I'm winding up the news conference trades correctly. I know I got the last one, but just before that. Let's see here. Okay, FOMC economic statement, funds rate, press conference. All right, December 18th. Okay, yeah, that one, it finally made the move, but by 3 o'clock it was only about 25 pips, so it would have been about $25 loss. We'll go back and look at a couple others. The one before that, definitely. September 18th, massive, massive move. So, you can put it on. You're probably looking at a $25 loss. You're going to hit your profit by 3 o'clock on that straddle on your Euro-dollar.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So, what do we got? Well, we went in and we looked at doing a straddle because the iron condor was just way too narrow on the euro dollar. Now, it's a pretty expensive straddle, but it's a press conference release, which means right at 2 o'clock, we're probably not expecting to see the whole big move. So it's one of those just sort of going to have to wait it out a little bit. It's going to be a little bit more tough to pull this one off if you're not experienced with this kind of trade. If you are going to do the trade, where do you need to take your profit? Well, let's say you went in and you did buy the upper spread. But let's say you bought it for where I got filled at $35.96. Okay. And let's say you sold the lower spread. I got filled at 1.3549. Oh, that's backwards. So let's see. We got I got filled on the 35.70 to 38.20. And I got filled at 35.96. Yeah, that's right. Okay, so 1.3591. And then on the 33.20 to 35.70, there we go. Got filled at 1.3. I got 549 on the sell side. There we go. That makes a little bit of a difference. And, okay, so then we go in here, we go, okay, we have about 89 pips, so what is that profit target? And so now you can go in and go, okay, well, I want to get out of the trade when the market reaches how many contracts you did, whatever. When the market reaches my profit target, and you could go for a 0.5 profit target or a full profit target. If I went for a 1-to-1 profit target, then I'd be going for, in this case, 36.64. Actually, on the buyback side, so on the sell, I'd be looking to buy back at. And the 35.20, the 35.70, the one that you sold for 35.49, then you'd be looking to buy it back at a price of 34.76. Okay? So we got that one in. And then the one that you bought for, say, 35.96, you'd be looking to get out of for 36.64. And put that one on. Now, you can also look at binaries on this. You might find some great price binaries, sometimes like leading right into the news announcement, like what's about to happen right now. You might be able to go in here and find some that are just like perfect. Again, you don't want those 2 o'clock ones. So we're going to go in and bump that up a little bit, get rid of those. Focus on don't want the 230s. So we just want euro, dollar, pound, dollars, get rid of crude oil. Okay. And you can just sort of see basically based on the range. So maybe next Fed funds rate we'll talk about that. It goes back and forth with press conferences. That makes it a little bit more challenging. But with the market trading right now on, say, the pound at 39.46, or 1.6940. Just grab the pound, make it easy. Okay. So 1.6940, that's our at the money, basically right here. Then you can see, trying to pull one off, like, say 30 ticks up, at 40 plus 30, that's about 70. It's going to cost you about $70. So it's really not that much better priced on this right here. And so maybe what we'll do is we'll go into next time, because that's one of the stages I want to do on the calculator, is I want to show you how to do a condor with a strangle. So a strangled condor or a strangled butterfly. And combine those two together to let flat trades pay for one thing and breakouts pay for another. See if you can get a good combination there. All right, y'all have a great day. I'll see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.